more people are going to drop out and leave the market. More investors are going to drop out and leave the market. So what does that mean? Okay, it means there's could be more opportunity for you. Hey, this is Matt Pichet, the Fruitful Investor and your investing coach. And today's video is about the boom that's still going hot here in Kitchener, Waterloo and Cambridge. If you're trying to invest here in Kitchener, Waterloo, or you're watching the market, you know how hot it is and how hard it is to buy single-family properties when you're going against emotional first-time buyers who are just throwing offers at these properties with crazy bidding wars. So the answer is, or the question is, should you still invest here in Kitchener, Waterloo and Cambridge? And the answer to that is a strong yes. I know it's a pain in the butt to have to deal with these prices accelerating very quickly and these first-time emotional buyers throwing out crazy offers, but we can still be savvy investors even in this market. So should you invest here? Well, because it's so hot in Kitchener, Waterloo and Cambridge, it just kind of illustrates the fact of how desirable Kitchener, Waterloo is. It's close to the 401, it's close to the GTA in Toronto in driving distance, and it also has a very diverse economy, which makes it very safe for investors to park their money in this city. So what things do I want to look for when investing in an area? You've heard me say this many times before, and they're not my words. It's I learned this from better investors than me. You want to be looking for GDP growth, okay? So an area that's growing. When the area is growing, okay, the population grows, people come in. When we have GDP growth, we have job growth, which means people come in even more, which is what we're seeing here. Kitchener Waterloo is extremely hot. Jobs are being produced all the time, especially in the tech industry right now, which is so hot and growing. It's actually crazy. So there's a lot of demand here and the action is here. Okay, so you want to be investing in an area where the action is. Now, a lot of investors are focusing on price, okay? And I know it can be easy to focus on price and say, hey man, I bought this semi like last year for $250, $260, and now they're selling for $330. What the hell is that? I can't do that anymore. Okay, don't focus on the price, okay? The mistake a lot of people are making, a lot of investors, is that they're going away from Kitchener into smaller areas, okay? They're going to Brantford, Stratford, London, Windsor, worst of all, going to Windsor, okay? These places don't have the fundamentals like Kitchener does. Now, some of those areas aren't bad areas, but they're not Kitchener, Waterloo, or Cambridge is. They don't have the demand and the desirability that Kitchener Waterloo does, not even close. The fundamentals here are extremely strong. To me personally, you know, they blow those places out of the water. So I know it's easier to focus on price and to go down, invest in those places and maybe get a little more risky, and you might win. Who knows? You might win. 10, 20, 30 years down the road, I'm sure you will, no matter where you invest in Southern Ontario. But you want to be where the action is. This is where the growth is happening. People are coming here because it's desirable, okay? So that's the kind of things you want to focus on. And then back to price, okay, yes, prices have gone up. Yes, it's harder to invest in this area, but that also means it's harder for other people to invest in this area, not just you, okay? So when things get tough, okay, I get a little excited about that because that means less people are gonna cut it and be able to invest in here. More people are gonna drop out and leave the market. More investors are gonna drop out and leave the market. So what does that mean? Okay, it means there's could be more opportunity for you if you can work a little harder and get maybe better quality JV partners who have more money, who can see the potential of Kitchener Waterloo continuing to grow. Okay, get them. Start looking for them. Start looking for better JV partners who have more money so you can still invest in Kitchener while other investors are fleeing the market because it's too expensive, okay? People said that about Toronto in the 1990s and the early 2000s. It's too expensive, okay? It's still growing incredibly strong. The thing with real estate is if you hold it for long term, okay, you very rarely ever lose, okay? You always win. So that's one point I want to make. Now, what if the bubble bursts, okay? We're hearing a lot of talk about the housing bubble. Okay, Doug Porter, chief economist from, man, I forget what bank it is now, RBC, I think. My mind's going blank here. He is strongly saying that there's a housing bubble, okay? So it's not even a matter of if the housing bubble bursts, it's more of when the housing bubble bursts. Yes, I kind of think there is a housing bubble going on. The stats are so strong, the science is so strong that we're kind of in housing bubble territory, if not already. So it's a matter of when it's gonna burst, okay, and how hard it's gonna hit. That we don't know, but a correction will come. They always do. Now what's gonna be the catalyst to that correction? We don't know. There's a lot of wild cards, okay? There's the Trump card. I don't wanna get too political, but he's very uncertain. A lot of investors are uncertain about him. He could do something to cause a financial meltdown, if you will. The stock market is at an all-time high, okay? This is the second longest bull market we've seen in history, okay? The last one was the 2008-2009 crash. We know what happened then, okay? Not saying it's gonna be something like that, but this is the second longest bull market we've seen in history, okay? So the correction is gonna come. It always does. How hard, we don't know. But going back to the place of location, where would you rather be when this bubble burst or the slump does come and the housing crash comes or whatever? Where would you rather be? At Kitchener, Waterloo, and Cambridge? Or would you rather be in a Stratford, Brantford, London, Windsor, okay, St. Catharines, okay? Where would you rather? I'd rather be in Kitchener, Waterloo because the fundamentals are so strong. What happened in the last biggest crash since the Great Depression here in Kitchener, Waterloo? Nothing. I actually invested my first property I bought in 2010. The worst time since the Great Depression. I bought in 2010 and I super successful since then. My properties have done very well and I bought apparently at the worst time possible, okay? Even if you buy at the top of the boom phase, the worst day, the top of the market, and the next day it goes crashing down, but you hold it historically, you will always win. You still will win. So it's more safe to be in the market, okay? A lot of people talk about this, a lot of top investors and top economists. The people who get hurt the hardest are people who leave the market or hold their money in cash, okay? So make smart decisions with your real estate, and it's always better to be in the market as long as you're using sophisticated strategies and you're treating your real estate properties like the business that they are. Okay, I just kind of went over it. Invest for the long term. Let's say the crash does happen, okay? So what? You don't have to sell, okay? Unless you have some other things going on in your life, but you want to have a long-term plan. If the market does crash, and it probably will to some degree, so what? Hold on to it and wait for the next boom phase. I know it might be tough in that time period. It's easier to say that now, but hold on. The market will go back up again, okay? So those are a lot of stuff I just threw at you. If you did learn anything or got any valuable tips from this video, please click like right below this video and don't forget to subscribe so you can get more of these awesome video tips every single week. See you in the next video.
Put your money in that real estate.
Hey, before you click another video, I want to give you some free stuff. You like free stuff, right? Click on the first link below this video and get my book, Single Family Investing Made Simple, absolutely free. Read as I walk a real-life client through the entire investing process from start to finish and document it for you. Click on the second link and get my other book, The Real Estate Investor's Handbook to Freedom. This book is a must-have for any investor looking to take their business and life to the next level. And last but not least, get my third and best book, 101 Single Family Investing Tips. Inside, you'll find 101 proven and tested investment strategies that I use every single day in my business in order to grow my wealth and manage my portfolio. I hope you take advantage of all the knowledge below, and don't forget to click like and subscribe so we can get more of these awesome tips. See you in the next video.